UFO gaming hasn't taken off yet, but there's a particular chart pattern that we want to be aware of because the count still holds true if you saw the last video. So we still got huge potential for upside, but again, we want to be cautious. So in today's content, we're going to do an update on UFO gaming. So if you like it, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So UFO Gaming, this was the video that we did. It was on the 13th of August. And the macro picture, we really zoomed, that's a daily chart. Said we've had a nice movement to the upside. We're calling a wave 1. We've had a nice macro ABC correction of a wave 2. And after that, what we anticipate is a wave 3 at a 1.618 to a 2.618. These are like the price target zones. But this pattern here is what we're going to focus on today. And we're going to jump in just straight into our live chart. Just going to go straight into some particulars. Really, really focused. So let's jump into the live chart. Okay, so we're on Dex Tools looking at the live chart data over here. Again, so what we just saw with the previous videos around 10 days ago was, again, we had this nice movement to the upside, which we call in a wave 1, 1, 2, 3, 4, 5 of a wave 1. Pretty clean, pretty clean. We like it when these patterns play out as clean as this. Had a nice A, clear B, and then a nice wave C. But again, we're going to focus on this part of the market. Because what tends to happen, what most people don't realize, is when you got a macro wave 1 and a wave 2, these Elliott waves and Fibonacci, this psychology is playing out on a mass global scale, like at a really large picture. But when you zoom right the way in to almost a day-by-day, minute-by-minute chart, these patterns also unfold and these ratios replicate themselves. So what we're going to see and what I'm going to show you, and we're going to look at this in a bit more detail, is exactly what we see happening over here, this wave 1 and a wave 2. We also see happening, let's see if this works, if I can go like this, yeah, down here, a wave 1 and a wave 2 on a more micro degree count. So I'm going to show you something in my course. In my course, Elliott wave, we're going to click on the Elliott wave section. We're going to go on to, really we're going to focus on wave 2s, but there's a couple of things I wanted to show you. Let's just go on to, let's have a look. What I want is, let's go for, I am looking for, here we go. Intermediate and micro. So this is what we want, the macro, the intermediate, and the micro wave counts. So there's waves within the waves. That's what most people don't realize. And again, this is high level. Again, I cover it in more detail in the course. But when we've got what we're looking at over here, this is what we're going to go over now. When we've got like this wave 2, a wave 2 typically breaks down into an A, B, C correction. Let me just make that even clearer. Because, you know, when you can spot these, whether you've got the position already or you're looking to get into a position, it just gives you more confidence, especially if the market's moving down. Because when markets move up, they naturally go through a profit-taking phase. And wave 2s tend to be an A, B, C, very deep profit-taking phase. And you need to be aware of this, because if you're not, it can be quite scary, especially if you bought near the top of this wave 1 and is coming towards the end of a wave 2, but you don't know is the end of a wave 2 or high probability end of a wave 2, and then you panic sell because of all the FUD, fear, uncertainty, and doubt around Bitcoin, and then the market takes off to form a wave 3. That's how it happens very frequently. People panic sell, they go, it's over, UFO is over, and they go, look, fundamentally it's a very strong project. It's just short-term profit taking. Markets are driven by fear and greed, speculation, and we need to be aware of that. By the way, if you want to learn how to do Elliott wave and Fibonacci, I've actually got a free Elliott wave and Fibonacci masterclass. It's in the link below. It gives you a very, very high level on looking at this stuff in absolute detail. And then if you want my course, it's at a massive discount right now. Normally $997, but currently £97. You get an invite to my private Telegram. We're doing workshops. We're doing them on the weekend. We've got a few in the week as well. We've got one today, which is Ask Jiggy or Anything. So the community is a phenomenal community. Just arrive. And literally, I do my best. We've got an hour to just answer any questions, technical analysis, and so on and so forth. So massive, massive value. So what we're going to now look at is exactly that. We're going to get rid of the indicator for a second. Let's get rid of this pink box. We're going to now, again, I'm going to emphasize this, because if you're new to this, I can speak quite fast and it can be quite confusing. A, B, C. So let's just draw that in. Let's just make sure that's nice and clear. And here we go, A, B, C, and then we're just going like this. We don't need to get too anal on the exact points on the counts for this part. But what we're going to now do is we're going to zoom in to this section of the market, the more recent. So the date is from the 22nd of Jan 2022 up until today, which is around, it's a month. It's a month's worth of data, right? And what we can clearly see on a daily chart, it's pretty clear. You can get it a bit clearer on a 4-hour chart or a 1-hour chart. But here, just so you're clear, if I use candles, each data point here represents a day. Each candle, each bar represents a day. And what the line does, it just takes the closing data. So I'm just going to show you this because sometimes it's not clear. On this candle, the closing data is the green part at the top. On the red one, the closing is at the bottom of the candle. What the line chart does, it just takes the closing data. So it just looks a bit cleaner for you to look at. And when you look at a bit more of a macro picture, it's better to look at closing day data. So what I see here, we said this before, 1, 2, 3, 4, 5. And I'm just going to change the color so we can see the text. Let's just change it to black. Sometimes it resets on Dex tools. Yep. At the time of last week when we did the video, we said this is a high probability wave 2 low, but the minimum occurred. We always want to be aware of the minimum that occurred. It happened nicely, but then we had a new lower low. So then we have to reevaluate this. We reevaluate this and we just go, okay, that wasn't a wave 2 low. What now looks much clearer. This is the art and the science of trading, by the way. A, B, C on a macro. That looks pretty clear to me. So now we want to do the analysis on this. So again, we're just going to jump back into the course. We just done the pattern count. So what we're going to do is we're going to jump into Fibonacci and we're going to just start with the retracement. So we want to do lesson 3, how to do a retracement for wave 2. Again, just a quick reminder, repetition being the mother of all skill. Everything is difficult before it's easy. We just know these 3 ratios, you know, this 50%, 62%, and 78.6% for a wave 2. Now, what you want to realize is when a market does a reversal, a trend reversal. Now, we don't know at the time if it is or it isn't, but it looks highly probable with UFO and other markets as well. Is the market doesn't know that is a trend reversal because the movement to the upside looks similar to other movements to the upside, even though it's bigger, but we've got an overbalance of price and time, which we'll cover in a bit more detail. So because the mass herd psychology doesn't know that it's highly probable, got a trend reversal, the first sell-off, wave 1 and wave 2. Wave 2 is a sell-off. It's a profit-taking wave. It's panic selling. It tends to be very deep, 50, 62 to 78.6% correction. Whereas a wave 4, when the market is really taken off for a wave 3, it's more obvious that the market's in a new trend. So the sell-off tends to be less. It tends to be more like 38%, 38 to 58%, and so on and so forth. So we want to be aware from a psychological standpoint that wave 2s are a deep correction, right? We're talking about 50% is healthy, and the typical maximum is 78.6%. So we want to be aware of this range. And if you've bought near a top of a wave 1 and you've held here, especially if you're new and you don't understand these natural human behavior of buying and selling behavior based on fear and greed, then a lot of people will sell down here and sell at a loss and go, okay, I've lost this much, let's cut our losses, and then only to see the market take off. Doesn't mean it's going to take off, it's just highly probable for a wave 3, which we can look at as well. So that's what we're going to cover today, is to go, okay, what are these ratios? And now there's another thing I want to cover as well. And we're going to add the 2 of them together, because when you add the 2 of them together, you get something called a confluence of events. And when you get these 2 things saying the same thing, then it's more highly probable. So we've got that. So we're going to do that wave 2, just register in your mind. Then we're going to go to the advanced section of Fibonacci. So we're just going to go down here. And I built this course deliberately like this, so you can use it like this. Go to the advanced section, and we're going to go to the ABC corrections. We want to go to, let me just find it, extensions. There we go. Yeah. Lesson 18, a fib extension for an end of a wave C. Remembering that we have looked at this as an ABC. So we want to do a wave 2 retracement. I'm going to show you that in a second. In fact, let me show you that now, just so we're on the same page. This looks like a wave 1, a microwave 1, even though it's broken down to 5 waves. Let me just put the sequence like this. So we want to do the retracement for the retracement of a wave 2. Let's just get this out of the way. Just going to pull this down here. And we're saying a wave 2 with a question mark. Again, remembering that we're doing probabilities and never certainty. So we can do a retracement for wave 2. We've done the pattern already. And then we're going to do what's called the ABC extension. I'm just going to show you this here. And then we're going to see it in the lesson. A, B, C. And we want to see what's the high probability end of this and have we reached that end. Doesn't mean it's going to happen. It just means it's highly probable. So if I just jump back here, and we jump into lesson 18, we're trying to get the ratios, right? We're not going to go into the lesson itself. We're just going to get the ratios. So I'm going to go into the part of the lesson that shows the ratios. Again, I'm going to zoom in. Again, I set it down here in this particular lesson, and it says typical wave Cs. Most common is the 100%. That's the one that we want to be most aware of, which means wave A and wave C often are like twins, like they equal each other in time and price, especially in price. We want to be aware of that. But we also want to be aware of the minimum tends to be 62% and the maximum tends to be 1.618, which is 162%. And this alone is powerful, but combined with the retracement, the wave 2 retracement, and the pattern, then we've got a whole different ball game that we're playing, especially if we've got momentum as well. So now what we're going to do is we're going to do that retracement first. So we're going to click this low to this high. We're going to just line it up. And we can see that we're close, just surpassed the 78.6%, which is 0.786, which is this red line over here. This is the typical maximum wave 2. Now, this pattern over here, and this is what you want to think about it. This holds true. This as a wave 1, wave 2. As long as this wave over here is not taken out. Let's just get this over here. This low is not taken out. You go, what does that mean, Jagir? Again, I'm just, if you don't mind, I'm just going to pop back into this because there's a couple of things that we just, it's simple but not easy because, you know, repetition being the mother of all skills. Lesson 5 in the Elliott Wave Intermediate section is the 3 rules and guidelines. And one of them is we want to be aware what invalidates a wave count. Is wave 2 cannot retrace past the beginning of wave 1, right? So that's what we're talking about here. This is wave 2. As long as it doesn't go below the beginning of wave 1, which is over here, then it's a valid wave count. And that's what we're looking at. We're applying the theory to, you know, in the practical realm, right? We're going, okay, we now are looking at this and going, this is the low of the wave 1. So as long as it doesn't surpass that, this wave count holds true. If it does surpass it, we just need to reevaluate. That's just the nature of the game. That's what we're playing over here. So now we've got the retracement. Now we can do a Fibonacci extension on DEX tools, which is what we're using today. It's called trend-based Fib extension. We're going to click that. We're going to measure this wave A. Actually, I'm going to do it on the side just so it's a bit cleaner and clearer for you to see. Go to the top of this wave A, which is the end of a wave 1. We're going to go to the bottom of the wave A. So this one requires 3 clicks. We're going to click, and then we're going to go back to the top of the wave B. And then we're going to click the cog. And we want 3 particular ratios, but the main one is the 100%. And look at that. It's right into that range, And the 62% is up here. But the main one that we want is this. So look at this now. Now we've got what's called a confluence of events. We've got pattern on 2 degrees. You got 2 degrees. Yeah, what does that mean? Well, again, we got a wave 2 after a wave 1. So that's 1 degree. And then we've got an A, B, C. And the C is the 2nd degree. We can go to another degree. We can zoom in and see if the wave C breaks down into a 5-ray sequence. But now there's 2 patterns that are saying this is very high probability. And ideally, you want to have a minimum of 2 degrees of counts. And then we've got 2 regions of Fibonacci. We got retracements of that wave 2 at the 78.6% zone. And then we've got 100% alternate price projection, also known as the Fib extension, of a wave A and a wave C. So now, this is just a highly probable, not guaranteed, probable. Here that I'm saying probable, meaning probability, never certainties, right? And if this holds, there's a couple of things we can do, which I cover in the course. And by the way, if you want to learn this, take my free Elliott Wave Fibonacci Masterclass. Is in the link below. I cover this in detail, and I give away a lot of stuff. And I want you to have the calls because it's cheap as chips, but it just gives you an edge on the market because we're playing crypto tennis, meaning that there's winners and there's losers. It's a zero-sum game, and you're playing against thousands, if not millions of other players that all have the same agenda. Most people, 90-95%, are speculating on the market, buy low, sell high, so you're competing. And if you've got the edge in your favor where you can buy low, like a very low, with a high probability opportunity of selling high, then it's a whole different ballgame. So now what we're going to do, we're going to finish up on, okay, if this holds to be true, let me just do it like this. We go, what's the minimum expectation even if we're wrong? Well, how I would view this is we want to be aware. If I can just grab this one. It's not liking it. Let me just grab it. Bear with me. Oh, that would do. That would do. Cool. All right. Yeah, what we want to do, when I'm looking at this, if I was buying this myself, I'm not actually buying UFO. I'm doing this because a lot of people were requesting UFO. If I was buying this myself, my mindset would be probability is never certainty. So I wouldn't say this is a wave one. I would say it's a highly probable wave one, but it could be a wave A. You go, what? Yeah, what? Bear with me. This is going to make perfect sense. This is a highly probable wave two, but it also could be a wave B. And you go, hang on, now you're confusing me. You get what? Yeah, but this is now going to be the probability thinking, statistics. I got a degree in mathematics, and a big part of it was statistics. You don't need high level statistics over here. This is just simple stuff, and we'll keep it really, really simple. That means there's two ratios, and we're going to be conservative and say, what's the minimum that is more highly probable beforehand? So what we're going to do is we're going to measure this wave A or B, project it from this 2 or B, because 2 or B's and wave 1 and A's, they actually look the same. So we don't actually know which one it is. So what we're going to do here is we're going to literally plug in 3 ratios. We got the 100% alternate price projection, and now we know from the previous thing that we discussed that wave A's and wave C's often equal each other, right? So if this is a wave A, well then the next wave should do a minimum of 100% of the first wave. So we want to know that. That's the minimum, my expectation. If it's a wave 3, then a typical wave 3 is 1.618, but a maximum wave C is 1.618. So we still don't know. So we just need to play the odds and play the odds and play the odds. However, there is an overextension. And if it does reach a 2.618, then it's pretty much a wave 3. A wave 3. So if the market, let's just say UFO took off tomorrow and it got to this point, I go, okay, this is the minimum expectation for a wave C. Not a wave 3. And taking a few other things into consideration, I would personally look to get risk-free in this kind of zone. You take a few other things into account. What would be the price? What would be the multiple? Let's have a quick glance. Loads of zeros in it. Yeah. 909. Let's just call it a 1. I think it's around a 3x. 3x. You have good opportunity to become risk-free. But then more clearer would be this: if it moved and continues to move here, then it's more leaning towards being a wave 3. If it shoots over here, then it's more than likely a whole new trend that's forming. And then I would zoom out like this and go, right, the big money is made in the big moves. You go, okay, what? Yeah, the big money is made in the big moves. Remember, there's multiple degrees of counts. And what I'm focused on is, yes, I will be focused on getting my entry at the best possible position with the minimum amount of risk. But I want to be riding the wave. The trend is your friend. Ride it until its end, until it reaches its bend. So this over here is a macro degree movement over here. This is where the big money is made. And over here, it would be like a 5, 10, 20x, or whatever it is, 10, 20x, 11x, 15x, thereabouts, depending on your entry point. Yeah, this is where I think it was a 12x, 12, 15x. Maybe it was even more. How many zeros are down here? Sometimes with these micro caps, not even micro caps, just when there's a lot of tokens in circulation, or in the maximum supply, the token price has lots of zeros, which has pros and cons. Sometimes it's difficult to read the price. But this is what I'm trying to get across, that these waves occur in a micro degree count, 1, 2, 3, 4, 5, ABC, macro. So it's like micro, intermediate, and macro. So here, this is what we're looking at. Now, if the whole market, if we do end up seeing a six-figure Bitcoin in 2022, what I anticipate, and this is what we're going to finish on, with many projects, UFO being one of them, if we do hit a wave 3, well, guess what typically happens? Well, this is what I'm trying to get across to you. Just think of you, right? What are you looking to do if you manage to buy down here and the price went up here? What would you look to do? Well, I would look to take profits, right? I know the markets don't go up forever because what drives the price up is more people buying. But if there's like 1 million people that are interested in UFO and all of them put in their full allocation to UFO, well, guess what? The money runs out. The money runs out, which means what's driving the price up runs out. So then it either is no one buys and sells no more and it just stays flat. But the likelihood is people are going to sell because they're going to take profits, right? For different reasons and everything else. So when we do see these ratios hit, what you're anticipating and preparing for is a correction. And a wave 4 is a profit-taking wave. So it means what you should anticipate next is a correction. Now, we should anticipate that the price should not go into the previous range of wave 1. And I'm covering a lot here, right? But hey, who cares? Let's just do this because it's important. That was a lesson that I actually wanted. Let me just go back into it. Let's see if I can just click back. Does it take me back? Yes. So what we want to do is just look at this rule now, and we'll finish on this. Because I just wanted to, because there's a lot of FUD out there, and this applies to Bitcoin, it applies to all your cryptocurrencies, and the patterns are pretty clear. So rule 3 is wave 4 cannot trade into the range of wave 1. So if UFO took off, like we just drew out, like this, then the wave 4 should not trade into the range of wave 1. That's what we're talking about, right? If it does, it invalidates the count, but it gives us a good indication of how much the profit taking should be. And typically, if I show you this, and I'm showing you like this because most people just don't realize that this information exists, and I'm making it like as cheap as chips. But you can take the free anyway Fibonacci Masterclass, and it gives you a good flavor. But what I wanted to show you is to prepare in advance. Here we go. What I'm looking for is the Fibonacci. We're just going to go to the foundation section of Fibonacci, and we just want to go to the retracement of wave 4. Lesson 5, how to do a wave 4 retracement. I show you how to, but I'm more interested right now in the ratios to show you. So the key ratios that we're looking for is this one. Most typical is 38 to 50%. Now, it can go further, but 50% is what we're looking for, but most often is 38%. So we literally just measure. We're literally going to just measure wave 3, bump up, and the retracement is 38%. And that's typically where wave 4s more often than not end and don't trade into the range of a wave 1. And I know I'm covering this fast, and if you haven't heard this stuff before, it can be a bit overwhelming. Hence, I've done the free Elevate Fibonacci Masterclass, and the course is broken down. But what I'm showing you here is typically more often than not, you'll get a wave 4. Natural correction, healthy. Like the market can't just go up. It has to have a healthy breather. How I also like to think about it is this is like a sprint. Usain Bolt is sprinting. And now he's at the end, his finish line, and he's out of breath. And he needs to catch his breath. He needs a breather. So this is the breather. It needs a rest. It needs a recovery. And then there'll be the next leg. That'll be a wave 5. That's more often than not what happens. So this is UFO, but it also applies. So let me know what you think below. We're doing a lot of stuff on Instagram, by the way. Follow me on Instagram. We're doing Ask Jiggy or anything on Instagram. We're answering a lot of questions on Instagram now, mainly because we're getting a lot of comments. So I want to make sure you're getting your questions answered where possible. But again, free anyway Fibonacci Masterclass. Buy the course. Invite to my private Telegram. We do weekend workshops. We're now doing some during the week as well. We've done a couple of Discord lives. Again, just to see what questions you have with TA. And again, everything is difficult before it's easy. But again, with time and practice, it gets easier and easier. I don't really read a quote from my book, but today I wanted to do one off the top of my head, just to kind of go, all right, where's the market at? How am I feeling? And what's the vibe? Now, at the moment, there's a lot of FUD, fear, uncertainty, and doubt. And this is where technicals hold its own, because I just ignore the FUD, ignore the news. I know there's a lot of stuff happening in the world right now, whether it's COVID, whether it's the Ukraine situation in Russia and everything else. And I go, look, when we're looking at technical analysis, we're looking at mass herd psychology. So because when I used to trade currencies, right, I trade currencies for over a decade. I didn't need to know what was happening in the country to trade the currency pair, whereas the Canadian dollar against the Japanese yen, I didn't need to know. I could just look at the chart pattern, and actually the Elliott wave Fibonacci psychology just played out more often than not with proper risk management. So let me just have a think. What quote today? I'm going to go with this one. I'll go with this one, right? So I've done a lot of stuff with neuroscience and the mind and the unconscious and how we operate and how we're hardwired as a human being. And there's a great quote from Buddha, and this is it. It says, "You and your world are composed of your thoughts. The wise person controls their thoughts." You and your world are composed of your thoughts, and the wise person controls their thoughts. Now, that's nice words, and it almost rhymes. But it's like, what does it mean? Well, we operate, this is proven with neuroscience, beyond reasonable doubt. This is not like a question. It's literally, we operate 95% unconsciously, which means 95% of your daily thoughts are unconscious, on autopilot. You're not even aware of them. And the way you drive your car, you get into the flow and you're not even aware that you're driving the car no more because it's on the unconscious. When we're speaking, we don't think what to say, how to say it. We've learned that and it's all unconscious. Your heart is beating, whilst you're watching this, your heart's been beating and you've been breathing, but unconsciously. You haven't been kind of going, right, remember to breathe in, Jigir, remember to breathe out. But what was also shown is that these thoughts that we have, on the unconscious in particular, have this impact on the world, and there's this energy, and it literally responds. And if it's not what you consciously want, what really counts, it was shown what you unconsciously want, what counts. And the reason I bring that up is often people are just spitting out what they want to spit out and they're not thinking. They're listening to a lot of the information and they're watching and they don't realize that's having an impact on their life because those thoughts are being digested. And, there's another great quote, which is, attention is the medium through which material appears in your consciousness. So attention, meaning when you're paying attention and you're really paying attention, the material, the information that you're paying attention to literally submerges onto the unconscious and then it becomes a part of you. So you and your world are composed of your thoughts. The wise person controls their thoughts. So when I say control, is also what you're letting in. So, we need to know what's happening in the world right now with the news, but how much do you need to know? Do you need to watch it 5 times a day, every minute, every update, which is going to impact you? Or can you just kind of get little nuggets? When you're looking at analysis and coins and looking at what's happening, people just looking for fear, uncertainty, and doubt. They're looking for the reasons. And it's a strange concept that how we're hardwired, but is really important that you take full control or start to take control of your thought process and what you're listening to, what you're saying, catch yourself saying certain things and protect what you're letting in. Like I'm very protective on what I let in. The reason I don't watch news is because there's great stuff happening in the world and there's negative stuff happening in the world, but the negative stuff sells. Like the negative stuff just sells more and it grabs more attention and it gets more views. And you'll see that time and time again. So you're just going to have to increase your level of awareness, your level of consciousness so you can play this game of crypto tennis. But it's beyond that as well because you can find more of yourself when you start controlling your thoughts. So there you have it. You and your world are controlled of your thoughts, controlled by your thoughts. You and your world are controlled. You and your world are controlled by your thoughts. The wise person controls their thoughts. Like, subscribe, hit the bell notification. Let yourself know that the markets can be read, that there are patterns, and you can see them ahead of time. You can combine Fibonacci and get the probability in your favor. It is probabilities, never certainties. Repetition being the mother of skills. You hear me? I repeat that. So it embeds in my unconscious and embeds in your unconscious. So you're not over-risking positions as well. So keep well, stay safe. Make sure you're playing to win, but at the same time, be conservative and proper risk management and do your due diligence. But again, keep sharpening your axe. All right, see you soon.